Good afternoon, everybody. It is about 20 minutes after the market closed on Thursday, November 8th. And market followed through with some selling today. I think it caught a lot of people by surprise. A lot of what I read this morning, whether it was on a blog or a news service, it seemed like everybody was saying the selling was a little bit overdone / exaggerated from a reaction on the election, and I guess that wasn't the case. Just to take a quick look on the intraday chart so you see how persistent it was. You can see here pretty much on the 15-minute chart we stayed below the 8 EMA pretty much for the entire day, other than the first 15 minutes of the day and one little short covering rally for about 70 or 80 cents just about 1:30 in the afternoon. And you can see here that we literally closed on the lows, give or take a nickel. So how does that translate back out to a longer term idea? Well, you can see here, and actually something that I want to bring up that everybody should be aware of, make sure that when you're plotting your own lines, or if you're looking at them off the price point sheet or anything else that we're calling out, make sure that we're all using the same moving averages. I actually got an email from somebody last night asking about simple versus exponential, so I just want to make it clear the ones that I'm using are all exponential moving averages. So what I'm going to basically say here is you can see the 200 period moving average in the spiders just below where we are right now, about $1 from today's opening. From today's close. So that would be the next technical level. If we push down and end up getting through that level, a little bit of support at 136, but it looks like the real next support is from July around 133. So I really don't like to use the word overbought or oversold, because we'll take a look at the Apple chart in a couple of seconds, and you can see that oversold can remain oversold or overbought can remain overbought, which is another reason I really don't like to use stochastics or MACD as an indicator to enter or exit trades. I like to stay just focused on the price action and what it is doing right now. And again, as I've been saying in the recap as well as in the morning calls, if you are primarily a trader who trades from the long side, anything unless the stock is already in a pretty decent uptrend, which although the financials were recently as well, you want to make sure that while the market's getting hit the way it's getting hit with good solid volume on the days that we're closing lower, if you venture on the long side, it should, for the most part, be stocks that you're building positions into as opposed to taking size, because it seems like the VIX is still going higher. Although it closed lower today, it did not sell off at all. The ticks closed on negative 1100, which is a very big negative tick reading, and some stocks still have some room to go to the downside as far as just looking at the charts and recognizing a significant reference point. So we just mentioned the spiders there and where the next level was. You can see there it's 136.93 as far as support for opening tomorrow. Might as well just start out digging right into Apple, and this is a good example of where oversold or overbought, in this case oversold, can continue in that direction. Zooming out a little bit further on the weekly chart, you can see down in this area here, if I highlight it, 528.66 is the next area where buyers did something significant from the summertime. This happens to be from May 14th, the week of May 14th. We did have a nice push up after it got down into that area, but that's actually $9 lower from where we closed. So still have a little bit of room. I mean, Apple has a pretty decent average true range of about $16, so an $8 move lower on tomorrow's opening, if we open lower, would not even be taking us halfway into what the average true range in the stock is. So if we open up flat, push down, and start heading down into that support on the weekly chart there, that doesn't necessarily mean just get long and buy because we're at support. I mean, obviously, same thing happened a couple of days ago with the 200 EMA, pushed down, and virtually every trader that I spoke to who gets involved with this stock on a regular basis pushed down, held the 200, and then had an inside day, and then actually opened up the next day a little bit higher. Quite a few people saying, okay, that's it, the downside's done, enough with the shenanigans, and let's start going back up for the holidays. And as you can see, it didn't happen. So I can't stress enough, especially in a stock that can have $5 movements intraday as a random fluctuation in the stock. Be very disciplined in getting involved with the stock on the long side until you start to see some intraday continuation patterns, in this case to the upside. So you really want to let the market settle in or the stock settle in intraday before you get involved, just because you might have the impression that it's gone a decent amount. All right, you don't want to have that. You want to say that's the spot, that's where I'm risking it to, and if it hits that spot, I'm out. But you want to have that spot be definitive before you put the trade on. Another interesting one from this morning, we'll stick with kind of the same area as Qualcomm. Qualcomm monster gap up on earnings. Did close at or near the lows, only about a quarter off the lows. However, it's still almost $1.30 off of filling the gap. So it did not fill the gap. It did gap down. Did trade lower into the 50 EMA on the daily and held it as support. And if you look to the left a little bit, the 50 EMA has been resistance on the way down. And the fact that it held as support this morning, that could actually be pretty constructive. So if I'm game planning Qualcomm tomorrow, we have the catalyst from the earnings, although it closed lower. If we open flat or a little bit lower tomorrow, you have today's low and the 50 EMA right around the 60-40 level, the same spot. That's an area where I'd be looking to bid Qualcomm tomorrow, looking for today's high just below 63 as what would end up being our first target. Google, again, you don't want to say overbought or oversold. We did just break down out of this range at 670. That was the lower end of the range, and now you can see here clearly 647.90 is the 200 EMA here in the daily chart, or excuse me, on the daily chart. Just looking at it a little bit further, again, keeping support and resistance levels, explanations as simple as possible. You want to take a look to the left and see where buyers or sellers did something significant, and it was 660, and we punched through that this morning, and basically on the weekly chart, the 50 EMA on the weekly is around 640, so 660 was the most recent support we're looking at, 660. Just above that, the 670 that we broke through yesterday, and it looks like 640 is the next level. So as these stocks start to come in, again, don't have an opinion. Just have a risk management parameter that you stick to. Stick to it like your capital means it, and don't have in your thought process it's gone too far, because you don't want, especially, and I'm saying this more especially because of these stocks that are significant price levels, $500, $600, $700 stocks. There's just no reason to take more risk until the stock starts to prove itself. The only time, actually, I had a very good question in mentoring this morning. Somebody said, how do you know when to take more risk? And that has to start out first with, how do you identify what a good trade looks like? And if you prefer to trade these stocks from the long side and they're going down on good volume, a good trade to the long side does not look like a stock that's going down. So let it bottom out a little bit, and even if you do end up looking to bid some of these stocks, it should be, as Scott says often and correctly, tactical long means he's implying to you it's not a strategic long, which means that the higher time frames, how he's designating institutional order flow in that direction, is not present. So if it's in a downtrend, order flow is to the sell side. So if order flow is to the sell side and you're looking to buy, it's okay to be on the side, or at the very, very least to have less share size, and what Jesse Livermore would say, probe entries in the position, so that if you're wrong with the right amount of shares, which in this case would be less shares. If you're right and the position starts to work out, you can always add to the position. We're going to jump right over to Citigroup and Goldman Sachs. You can see both of those are still coming in. Citigroup looks like it has a little bit of support just below 114, if not 112, which would imply there's a little more room to the downside. So stocks that were market leaders are also coming in right now. So you would, if you're looking for something that you might want to say, okay, let me find something that maybe I could bid into tomorrow if the market finds support at the 200 EMA and the spiders, you would be looking at stocks that, one, would be closed above the open today, or two, that would have had some sort of relative strength over the last month, because the last week has just been either flat or down. So you're going to be looking at stuff that had some relative strength. So if we can just go into a couple stocks that might fit that criteria, Boeing, BA, closed very well off of its lows today, almost $2 off its lows, as a matter of fact. Next one we had was VeriSign, VRSN. Neither one of those stocks are an uptrending. We're just trying to find little pockets of relative strength. VRSN did with good volume, close to 8 million shares today. Getting back to Lennar and Pulte Homes, both of those still showing some good relative strength. Matter of fact, both of those stocks are still above most of the key moving averages there. On the other side, stocks that we called out this morning, the OIH pretty big head and shoulders. Let me just zoom this out a little bit so you can see. That's about as clear of a head and shoulders pattern as I think you could possibly get, quite honestly. There's one shoulder. Let's see if I can do it as well as Scott does. There's the other shoulder. And if I was in high school and this was baseball season and we were having scoliosis testing, my right shoulder would be a little sloped, just like this one is, but you can see it's pretty clear. That's about as good a head and shoulders top as I could possibly see. And we mentioned it this morning that it broke the neckline when it got below 39 and a nice push down. So you can see that it's got a little bit of support here at 37. Going back to the summertime again, but the trend right now is clearly to the downside. So two different ways of taking advantage of that. You could be a short seller of this particular stock in some of the sectors here, stocks in the sector. Halliburton, just as clear. BHI and Schlumberger. Okay, all very, very similar charts there. And again, getting back to somebody's comment about how do you know when to trade a little bit bigger, although this is on the short side, this is a condition when you would expect or should plan to trade a little bigger. And the point that I'm pointing out here for you to learn is that what you would do is when a lot of stocks in the same sector are doing the same thing, that means order flow is going in or out of the sector. And if you want to take advantage of that, when a lot of the same stocks are doing the same thing, that would give you a trade expectation that would be increasing. Okay, just to take one stock on the opposite side of that, we take a look at UAL, a stock that would benefit from oil selling off here. And you can see on the daily chart here, UAL is now up 1, 2, 3, 4, 5, 6, 7, 8 days in a row from the open. So I had some pretty good support at 19. The other sector broke the trend line to the downside. This one is actually having a nice push to the upside. And you can see there's a little bit of resistance just above 2150. So UAL is benefiting from the sell-off in oil. So again, 200 EMA just below where we are right now in the spiders. That would be the first area of potential support I'd be looking at tomorrow. But again, I cannot stress it enough. I'm doing this a long time. If your game plan long does not follow through, be disciplined and kicking the trade out. Set your stops. Do not give it any extra room, and then look for your next spot where you think you have a good spot to bid into. All right, everybody, have a great night. I will see you tomorrow morning on the recap, on the daily, on the morning call. I'm doing too many videos, I think, at this point. See you on the morning call tomorrow. Have a great night, everybody.
I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.